Hi, this is Richard Campo from Rose Capital Partners. In this short video, I'm going to talk through the three main things you should think about when you're looking to move home and get a mortgage. Now, the first is always going to be how much can I borrow? And the answer is it depends. And it's driven on two factors. So firstly will be your income, and secondly will be your outgoings. And once you put those two things together, that's called your affordability, and that's ultimately how banks determine how much they can lend you. But to give you some broad parameters, most banks offer about 4.5 times your income. If you earn, say, over 100,000, most banks will go to maybe 5 times your income. And if you earn over 300,000, you're considered a high net worth individual, and normal rules don't apply, so therefore there's a lot more flexibility. Now, I would put the huge caveat in there, it depends what your income looks like, because if you get things like bonuses, commission, vesting stock schedules, carry, certainly if you're self-employed, things are assessed very differently. So that's why it's imperative to work with an advisor first time out, so you understand how much you can borrow, and they'll then hopefully drive your house purchase to make sure you're not let down further down the track. Now, secondly, is how much will it cost? Now, again, that's driven into two factors. Firstly is going to be your deposit. So the smallest deposit you can get away with generally is, say, a 5% deposit, going up to 40%. Once you put down 40% or more, you already get the best rates on the market. And the bigger the deposit, the lower the interest rate. The second part to that is what we call the structure. So the first is the product. So it depends whether you go fixed or variable and how long you want that for. And then secondly is how you're going to repay the loan. So do you want to go repayment, interest only, or do you want to mix the two? Once you put all those things together, we understand the monthly cost, and then we'll work with you to find the budget that you're comfortable with and tailor something suitable for you. And then lastly, what fees do you have to pay? So it's pretty much the same as when you bought a property first time out. One big thing to be careful of is stamp duty, because if you're retaining your property or bought others, stamp duty can get quite hefty, so I'd suggest you look at a calculator really quickly and understand the rules around that. You're also going to have selling agents fees, which might be different from last time out. Again, they wildly vary. You can go online for a fixed low cost, or you might go for a more premium option or a high percentage. And that's really sort of down to you and what sort of service you want to get. But the rest is broadly the same. There'll be some legal fees. Lenders charge arrangement fees and survey fees, although survey fees are often free now, and arrangement fees can be added to the loan. So it's fairly light from the mortgage perspective, but all those other things need to be factored in. So once you put all of that together, you should get a good idea of your budget, the costs, and then ultimately what you've got to play with. Now, obviously, I've only touched on this today. It's a huge topic with a lot to talk about. So if you want to look in this in more detail, there's a link below. You can go to our website. There's a podcast, lots of information. And ultimately, if you want to talk to one of the team to help you out on this, we'd absolutely love to do so.